I have a message directly from the president, and I quote, "Based on the fact that there's a substantial chance of negotiations that may or may not take place with Iran in the near future, I will make my decision whether or not to go within the next 2 weeks."
Well, the uncertainty continues as President Trump is known for setting 2-week deadlines. Some he's followed through, some he's missed, and some he never acted on at all. Live from Singapore, this is Insight with me, Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. Crude prices fall as Trump sets a 2-week deadline on Iran, but it's been a turbulent time for the oil market with volatility spiking and prices set for a third week of gains. Alpine Macro's chief geopolitical strategist Dan Alamario thinks investors are currently too sanguine about the risk of war. He joins us to explain why he's cautioning against buying the dip. The Thai Prime Minister's political fate hangs in the balance as more coalition allies eye the exit. Investors have been bailing out too, with the benchmark stock index losing more than 5% this week. Javelin Wealth Management's Polka Mishra will have more on the outlook for Thai as well as other Asian markets. Our top story today, President Trump putting off U.S. action on Iran for now. The White House says he'll decide within 2 weeks whether to attack, adding that his goal remains halting uranium enrichment and he remains open to diplomacy if possible. The 2-week negotiating window marks a step back from Trump's run of tough rhetoric, which included warnings for all residents of Tehran to evacuate. But the president, for years, has had a habit of setting 2-week deadlines, sometimes falling through and at other times missing the window or never acting at all. Bloomberg earlier reported that senior U.S. officials had been preparing for the possibility of a strike on Iran as soon as this weekend. Meanwhile, satellite images show that Iran is racing to get its oil out into the world, revealing some unusual logistical steps Tehran is taking as President Trump considers his next move. Let's go to Dubai and Horizon's Middle East and Africa anchor, Jumana Basachi. Jumana, what exactly are we seeing from Iran?
Yeah, well, the whole world is still in wait-and-see modes. But I think, as you were just reporting there, Haslinda, the decision has still not been made yet from President Trump's perspective. And we are potentially looking at a decision being made in the upcoming 2 weeks. Unclear whether they're going to opt for that path of military intervention or pursue the diplomatic route. It should be noted that the press secretary yesterday also in her comments says if there is a chance for diplomacy, the president is always going to grab it. That being said, there are a few signs on the Iran side that they may actually be preparing for the possibility of things intensifying even further. And somewhat surprisingly, looking at some of the oil export data that has come through from tanker trackers, they have showed that the oil exports coming through from Iran have actually moved upwards since the war started about 1 week ago, exporting an average of 2.33 million barrels a day in the first 5 days of this war. That constitutes a jump of 40% versus the average amount of oil that they've exported through most of this year. So they're exporting more. Not only that, but if you look at the storage facilities, the reservoir facilities on the Al Khorg Islands, that also shows that they're replenishing the reservoirs very quickly as well. Why? Because they want to get the oil out as quickly as possible before things perhaps intensify. So interesting to note from that perspective. Also from a weapons stockpile, the Israeli military estimate that over 400 missiles have been sent towards central and northern Israel since this war began. But they are estimated to be sitting on around 4,000 ballistic missiles. The intensity of the overnight attacks from Iran into Israel has started to slow down, also perhaps signaling that they're keeping some stockpiles ready to go should we get a further intensification of the war and the U.S. participation.
Jumana, we often talk about Iran's proxies. As tensions in the Middle East continue to rise, why is Iran's network of proxies nowhere to be found?
Yeah. So the main one that people have talked about, the largest non-state militia in the world, is Lebanon's Hezbollah. And you just have to rewind back to the war that took place between Israel and Hezbollah towards the end of last year to understand why this time around they've been reticent to act. Namely, a lot of their arsenal has been wiped out. The Israeli military estimates that 70% of Hezbollah's arsenal has been wiped out. Their command structure has been depleted. They also have less political clout in the country with a new government that is pro-West, pro-Gulf nations, and is really trying to do the right thing to get in the right books with some of these Western nations. You also had the U.S. ambassador to Turkey and the special envoy to Syria in Lebanon yesterday sending a warning shot saying it would be a really, really bad idea for Hezbollah to get involved in this. So they've been quiet. Hamas obviously massively depleted and on the back foot after more than 20 months of war with Israel. The Houthis, as we know, and they were the actors that had been firing missiles towards ships going through the Red Sea. Don't forget, they also have a truce signed with the U.S. over a month ago. They've been quiet as well, and they tend to act autonomously. They're not as closely aligned to the Iranians as people would think. They tend to make up their own decisions. But they have said, should the U.S. get involved, they would want to act as well. So that only leaves us with the Iraqi militias, Kataib Hezbollah, and they actually overnight have put out quite a strongly worded statement directed to the U.S. saying that U.S. assets in Iraq could be a target should the U.S. wade into the war. So perhaps the Iraqi militias that are closely aligned to Iran is the place to watch.
Great insights, Jumana. Horizons Middle East and Africa anchor Jumana Basachi for us in Dubai. Now, the conflict in the Middle East has triggered a turbulent week for the markets, especially in oil prices. Avril Hong is here with a closer look and talk about vol.
Yeah, massive volatility, Has. Oil has had a wild ride this week. We've seen these massive spikes. It's set for a third weekly advance. And of course, we saw overnight Brent going from about $79 a barrel amid this chatter that the U.S. could strike in a matter of days. Now we have a 2-week window. Oil is sitting below $77 a barrel. Volatility has spiked this week. Time spreads have widened. We've also seen the range of trading for Brent at about $8 a barrel. And of course, the subtext to all this is the traders' concern about the Strait of Hormuz, which so far hasn't been choked off, but it's still a risk. And also whether there's going to be collateral damage if we see the involvement of the U.S. So far, again, when it comes to Iran's energy infrastructure, some impact, but its export facilities have not been affected. That's a key thing that traders are watching. Now, flip the board. This week, we've also seen dollar firmness, and that has cast some doubt to the dollar bearish consensus that has taken hold this year. For now, we're seeing the greenback losing ground against most G10s and most of the Asia currencies. And also, we are keeping an eye on some of these Asia FX. The index of them is firming up, but note how these currencies of economies that are net importers of oil, they're likely to remain under pressure. Us.
Right, like the rupee as well as the Philippine peso. Avril Hong, thank you so much for that. And speaking of oil, major central banks have been flagging that they are keeping an eye on the war's impact on energy prices.
What we have seen so far, the increase in the oil price in the last days, has only a very small effect on inflation.
We've seen oil prices, for example, increase since the attacks. But we are thinking about and focused on the impacts for UK inflation, and so we're monitoring and carefully assessing those.
Possible that we'll see higher energy prices. What's tended to happen is when there's turmoil in the Middle East, you may see a spike in energy prices, but tends to come down. Those things don't generally tend to have lasting effects on inflation.
Let's get perspective from Dan Alamario, Chief Geopolitical Strategist at Alpine Macro. Alpine is an independent global investment research firm, focuses on top-down analysis of cyclical trends in the global economy and a comprehensive view of major geopolitical trends. Dan, good to have you with us. You know, we know Iran is currently on a 2-week notice. I'm just wondering if diplomacy is really a real viable option right now.
Thank you for having me, Haslinda. I think it is. I mean, they have a short period of time. I think the Trump administration said that Iran has 2 weeks to negotiate. That's what the 2 weeks is about. It could be shorter, actually. We don't know. It could be quite uncertain. The other thing I would mention there is whether Iran is willing to take a deal or is willing to make a deal. The thing is, what the U.S. is probably asking for is an end-to-enrichment sort of stop or lessening of Iran's missiles program and pretty intrusive inspections. And Iran, of course, at the moment, is in a bad, I would say, leverage position in negotiations. It's not been doing well in its war with Israel. So the question is, does the regime in Iran want to move to negotiate with the Trump administration? If it does not, then it's quite possible that Trump will decide to intervene offensively and bomb Iran's nuclear and military facilities or even its leadership. We don't know yet. There is also possible that it does nothing and it waits. The thing to keep in mind is that the United States and the Trump administration has some concerns about domestic support for intervening in the war, and it would prefer if Israel could do sort of degrade Iran's nuclear program by itself. So it is not yet entirely clear what happens. I think this 2-week negotiation period, however, it could be shorter, could be a bit longer, but the risk of the U.S., of course, intervening has increased, and the sort of amassment of military assets in the region from the U.S. side is quite considerable. So again, it's going to come to President Trump, frankly, making a decision whether to intervene now or potentially later.
Well, might it happen this weekend? We know that Trump is set for a national security meeting on Friday. We've seen how Israel attacked Iran before that meeting that was set to happen to talk about possibly solutions. But here we are in the situation in the Middle East. Might the U.S. take action this weekend?
Entirely possible. I mean, that's the precedent you mentioned is exactly what happened. And I think that the other thing that has happened today, you had White House officials coming and saying that Iran may be as close as to 2 weeks to having enough nuclear material for a bomb. Now, of course, the estimates on that vary. There is controversy around how long, if Iran were to have a bomb, how long that would take. But the fact that at the same time as President Trump said, there is a 2-week period in which it wants to see if you have last-minute negotiations. At the same time, you have the White House coming out and saying, look, after 2 weeks, if Iran makes the decision, they could probably have a nuclear weapon. So that, again, speaks to the point you're making.
I'm just wondering what the options are for Iran. If Iran sees itself headed for a defeat, might it just develop a crude nuclear weapon? Might that happen in a hurry?
It's possible. I mean, that's sort of the worst case scenario. We don't think that happens. We put a very small probability on that. But the reality is that as the regime fears regime change, and the talk out of Washington or Israel about regime change makes that more likely, you have the regime potentially deciding to race to get a nuclear weapon in the hope that it establishes nuclear deterrence. And then it forces Israel and the United States to back off, basically regime insurance, if you will. Now, that is a very risky proposition, because if Iran were to do that, there is also, I would say, about a 50-50 chance. It could go either way. One, Israel and the United States could back off, or they could decide to escalate an attack quickly, especially given that they may think Iran does not have the capability yet, or it doesn't certainly have any kind of second strike nuclear capability. So the idea is, Israel and or the United States could bomb Iran at an intensified pace, then essentially calling Tehran's bluff. So Iran could do that, but again, that raises the stakes. Of course, that would be a massive market risk-off event if Iran decided or declared itself a nuclear power, and you could actually have a risk of the war kicking into a higher gear. But again, the risk of that, I think, at this point is low, but it's definitely worth watching.
Yet, Dan, you talk about how markets are pretty much underpricing the risk, right? I mean, a war in itself is unpredictable. It's hard to gauge what comes next.
Right. I mean, I would take a step back and say that if we look at a number of scenarios, I have about 5, and 3 of those, and I'd say those would account conservatively for 80-90%, Iran loses. So, markets underpricing the risk go from that premise, which I think is correct. I think Iran cannot fight and really win this conflict. Either it gets defeated or it negotiates its nuclear weapons away. I think that's the most likely end game. The problem is markets are pricing that in, and this whole buy the dip sort of sanguine approach to conflict too soon. The reality is that Iran could fight longer on, the war could drag on. As you said, war are unpredictable. War is unpredictable. I mean, if you look at most recent wars, I mean, even if one side wins, seems to be winning at the beginning, it doesn't mean it will win in the end. So there's still a lot of uncertainty. Again, you could have the U.S. intervention, you could have Iran doing something drastic, you could have a situation, for example, where Israel has miscalculated the amount of missile defenses it has relative to Iran's missile stocks. Iran could have more staying power. So again, there are still risks. There are still things that can happen, and I think markets to some extent are pricing the buying the dip too soon. I think it is essentially the right call, but it's a question of timing. And as you say, as the war continues, it is unpredictable, and there may be more sort of negative events or market negative events on the horizon.
There are expectations that if the Strait of Hormuz were to be shut down, we'll see oil prices at 120, 130. What's your own calculation?
I think if that happens, that's true. I think that's exactly our calculation. Oil prices could double if you close the Persian Gulf to shipping, to oil shipping. There are a number of scenarios there. I think that is unlikely to last long, because if Iran were to move to close the Straits of Hormuz to shipping, the U.S. would intervene. Iran doesn't have the military capacity to fight the U.S. So that would, I think the straits would be open quite quickly. But again, you would have a significant spike in the price of oil, probably for a few weeks or a month or two, and then that would fade out. The other thing to take into account is Israel could also attack Iran's oil facilities, especially the Karg Island. If it were to do so, that would take some oil off market. And again, markets would also price that in. We think that would be probably $10, $20 oil risk premium in that. Israel, again, has not done that, has not attacked Iran's oil export facilities yet. But as the war continues and especially intensified, that's somewhere on the target list, I would imagine.
Dan, might the fall of Iran, if or when that happens, be a geopolitical disaster for a country like China? We know that 90% of Iran's exports go to China, and also the Belt and Road Initiative is contingent on the movement through Iran.
Right. I mean, if you see Iran's oil not coming out, or oil not coming out of the Persian Gulf, which is about 25% of global oil, or 20% depending on how you count, and a lot of it goes to East Asia, that's obviously negative for East Asian markets, including China. I would say that regime change in Iran is tricky. I don't think it happens during the war. Most regimes don't fall during a war. They tend to mobilize. They tend to suppress dissent. We don't see any signs, frankly, of the regime cracking, or you'd have to look for a military mutiny for that, and we don't see that. But after war, if Iran loses, and that's if it loses, a lot of regimes that lose wars, think Argentina after the Falklands or Milosevic after Kosovo, tend to be delegitimized, and then you have this kind of internal regime change. Now, again, if that happens in Iran, you're not going to get a liberal democracy. You probably get a military junta, parts of the Revolutionary Guards, parts of the old regime. Is probably going to be an authoritarian regime that's unpredictable. And that's probably not the worst case scenario. The worst would be some sort of internal civil war and chaos. I mean, think Syria before this year, but, exponentially more dangerous in the region. So regime change in Iran, as opposed to, reining in its nuclear and missile program, is a goal that, if pursued, could result actually in a significant amount of instability. And that's something that Western governments are obviously taking into consideration.
Well, a regime change is also undesirable to China. A lot is at stake for the country. I'm just wondering, given developments right now, do you see China coming to Iran's rescue in any way?
No, I don't think either China or Russia, which has a closer military relationship with Iran, is going to do that. I mean, China, again, is obviously an importer of Iranian oil, has economic ties with the country, but Iran is not a Chinese ally. It's not in China's interest to enter a conflict potentially with the U.S. Same applies to Russia, which actually is in many ways closer to Tehran than Beijing. So I don't think that's in play. We get that client question very often is, can this lead to a great power war? And I think that's highly improbable.
Dan, as we await the next move from the U.S., isn't it true, though, that U.S. involvement, direct involvement in the Israel-Iran war is pretty much contingent on the authorization of Congress? Only Congress can give the okay for an unprovoked response from the U.S.
Well, in theory. In practice, no. I mean, if you look at last time Congress actually declared war or authorized war, that I don't remember off the top of my head. I think it was World War II, or maybe the Tonkin Gulf in Vietnam. U.S. presidents have a lot of authority to intervene, especially if it's a limited intervention. Again, the U.S. will not invade Iran. I think the options on the table have to do with air and naval strikes on Iran's nuclear facilities. And the U.S. has done that in the past without a congressional authorization. So there's a strong precedent that the president has the authority to do that without Congress.
Dan, thank you so much for your perspective. Dan Alamario, Chief Geopolitical Strategist at Alpine Macro. Now, still ahead this hour, we'll get market insights from Javelin Wealth Management partner Polka Mishra. Hear why she's bullish on Asian markets, including India and China. But before we head to the break, here's a recent history of Trump reaching for his favorite two-week unit of time.
Just set the tariff is something that we think that will happen, I'd say, over the next couple of weeks. Wouldn't you say? I think so. Over the next 2-3 weeks.
At some point in the next 2 weeks or 3 weeks, I'm going to be setting the deal. We're meeting with almost all of them, including China.
We're going to be sending letters out in about a week and a half, 2 weeks, to countries telling them what the deal is. Nuclear, I'll give you 2 weeks for approval. Iran's got a lot of trouble. And they want to negotiate. I said to the people, why didn't you negotiate with me 2 weeks ago? You could have done fine. You would have had a country.
Welcome back. You're watching Insight. Here are some stories we're following. A SpaceX Starship rocket has exploded on a test stand in Texas, causing a massive blast and plumes of flames and smoke. The rocket appeared to be undergoing a routine ground-based engine test. The company says initial analysis points to the potential failure of a pressurized nitrogen tank in its nose cone. It's the first Starship failure in years during a ground test. We're tracking the mainland-listed shares of Chinese heating system supplier Zhejiang Sanhua. Bloomberg has learned that the company has raised $1.2 billion after expanding the size of its Hong Kong share sale. It's said to have priced over 400 million shares at the upper end of the price range. Demand was said to be strong enough to trigger an option to sell 15% more shares than planned. Hong Kong developer New World is set to be close to securing an $11 billion loan refinancing deal. Sources say it's received preliminary consent from all its lenders for the deal. The agreement's success hinges on securing full consent from over 50 existing banks by the end of June. New World will also have to put up additional collateral for almost $3 billion in loans due in 2027 and beyond. Coming up, Javelin Wealth Management's Polka Mishra says she still sees a low probability of a Fed rate cut in September. More on her outlook for central banks next. Keep it here with us. This is Bloomberg.
The Israelis are doing the West's dirty work. And I think what that implies is that there is broad agreement that Iran cannot be allowed to develop a nuclear weapon.
And they've had substantial success in damaging Iran's missile, air defense, and nuclear facilities. But substantial success is not complete success. Unless the regime changes, the fundamental issue probably will not.
When you threaten to destroy Israel, is there an intent to build a bomb or not? And that is what they want to remove. And I think that this time they will not stop the conflict until that threat is removed.
Some of our guests this week sharing their insights on the war between Israel and Iran. Now, aside from the conflict in the Middle East, traders were also watching multiple central bank decisions this week. The Fed left interest rates unchanged, as did the Bank of England and the Bank of Japan. This comes as the BOJ pulls back from bonds. Meanwhile, policymakers in the Philippines, Sweden, Norway, and Switzerland all cut, and Brazil was the outlier, raising its key interest rate to 15%. Let's get market insights from Polka, Mishra, partner at Javelin Wealth Management. Well, it's not surprising that central banks are pretty much confused. I mean, they don't know what to do, and who's right?
No, they don't know what to do, and different central banks are facing different challenges in this market, Haslinda. So if you look at Asia, it's very vulnerable to what's happening in the Middle East. The currencies are very vulnerable, but at the same time, they need to support growth. You look at Europe, especially take Switzerland, for example, back to zero interest rate regime, and the Swiss franc has gone up 10% this year. So they're trying to actually hold the currency from becoming even stronger, but that is become the safe haven currency as people are trying to diversify away from the US dollar. So it's not just inflation, it's not just unemployment, but it's all these global challenges that are making life very, very difficult for central banks.
How much is driven by the price of oil? Because we know India imports almost all its oil needs, and it cut rates by 50 basis points, which was a surprise. BSP also cut. It is also an importer of oil.
Yes, I mean, I think India's decision came in much before we felt that there was a real chance of US jumping into the conflict. But it is a big factor. It is a factor especially for countries like Japan, Indonesia, net importers of oil. Korea is another vulnerable market. Now, it really depends on how the conflict unfolds. It is too early to say that the oil price will remain at the high sustained level. Last OPEC meeting, OPEC did highlight the intention to increase production. We're still not at the pre-pandemic level of oil production, so that should cushion some of the blows. So I don't think that that's been factored in completely right now. It really depends what happens and doesn't happen over the next 2 weeks, and that's going to decide where the oil price actually end up.
So which countries in particular are you focusing on? Which countries are most at risk?
For us, I think Japan is definitely more at risk, and we saw yesterday policy making with regards to the yield curves as well. It's net importer. It is an economy which is turning around, which is now going to have to manage inflation from oil. Its real wages are now stopped to increase simply because of this inflation coming up. So that's one. Korea, we've seen the recovery in the market, but that's more been driven by investors coming back after the political stability. So that's another market that is vulnerable. India is vulnerable too, but not to the same extent. I think India has announced that it'll probably stop exporting oil goods if the supply gets affected. So these countries definitely are the ones in Asia, which are a lot more vulnerable. Of course, Middle East is more because of the conflict and the risk associated with that, not just the oil.
As we talk about the risk, it is quite interesting to see how the dollar is getting repriced. I mean, de-dollarization is not dead, right?
No, dollar is a bit better priced now, I think, than it was, off around 10-15% from the peak compared to the key currencies. There is still more risk to dollar, but I think it'll be a lot slower now because it's a bit more fairly priced. But de-dollarization will continue because there is a lot more risk, not just the dollar, just what's happening with the economy. So investors are slowly moving away. We're seeing that from our investor base as well, looking to diversify away from dollars, looking at more options. So, so far, most of our products are in dollars. That is where the markets have been. It is a demand and supply. As more and more investors look for products denominated in different currencies, that is how they will move away. So funds are also going to start focusing on that. And as we talked about it, Swiss franc, Norwegian krona, all these currencies, we've seen even Japanese yen being tagged as a more safe haven currency compared to the US dollar. So that diversification, especially into European currencies, is happening now.
In terms of Asian currencies, which are the best crosses? If you take a look at the Philippine peso, it is the worst performer in Asia.
Yeah, we do not look at trades in Philippine peso. We look at more the majors. So we look at Aussie dollars. We would look at Japan. I think Australian dollar is now come up a little bit after a bit of weakening. So those are the crosses we look at more as opposed to Philippine pesos. Not that heavily traded, so it does not help trade as much as well.
Of course, in the end, it is about the strength of the dollar, and a lot also depends on where the Fed goes from here. If you take a look at the dots, still pricing in 2.
I think that's a bit aggressive, but if you look at it, the split between the Fed is quite diverse. So you look at, I think if you look at the median, it is 2. If you look at the average, it is 1. So Fed's also not sure what to do. We're pricing in 1 rate cut, not 2. We expect 1 rate cut, not 2.
It's also possible that it doesn't cut at all this year.
It's possible it may not happen because the effect of tariffs have not actually come into the economic metrics. Now, remember, the GDP numbers from US were weak in Q1, but that was because of the increase in the exports. So as a result of that, this time around, the GDP numbers may turn out to be stronger. But that data is very noisy. So it's only after Q3 we might see some data that is actually representative of what is happening in the economy as opposed to just adjusting to the noise. So you're right, we may not see a rate cut. We might see 1 rate cut. I don't think we'll see enough weakening in the economy for Fed at that time to cut significantly.
Isn't it surprising that the markets are doing so well? If you take a look at the MSCI ISPEC index, it is up 8% year to date. It is an outperformer. I mean, it feels like people are forgetting that there are at least 10% tariffs coming up, and the implications have yet to be played out in the economy.
So I think that is one of the bigger risks to the market from our perspective, is that markets kind of got a fatigue of this talk around tariff, and that's why we said uncertainty is much worse for market than bad news, because people have kind of thought that the 10% is already there, no one's talking about it, but actually the effect of that in the earnings has not come up yet. We haven't seen that in results. So the risk for that is that when it incorporates into actual corporate data, actual economic data, we could have a very strong sell-off at that point.
Yeah, talk to us about that possible correction. What kind of, is it going to be a deep correction?
It could be a deep correction because we don't, so we still don't know where we will end up on the tariffs, right? So we still don't know whether it'll be 145, 245, 0. So tariffs with China, tariffs globally, there are deals being done every day. So I don't think it'll be a one-off deep correction. I think it might end up being a step-by-step correction as the impact first comes into one currency, one geography, but the results, earnings seasons are going to become a lot more interesting now.
Polka, hang tight. Polka Mishra, partner at Javelin Wealth Management, is sticking with us. Now, still to come, testing times for Thai Prime Minister Paetongtarn Shinawatra with a governing coalition on shaky foundations. A closer look next at the country's latest political turmoil. Keep it here with us. This is Bloomberg. Welcome back. Thailand stocks were battered this week as a leaked phone recording of the Prime Minister with a Cambodian counterpart unleashed fresh political turmoil. Paetongtarn Shinawatra faces calls for resignation. Avril is with us, and this political uncertainty piling pressure on Thai assets.
Absolutely. I mean, you're seeing a bit of reversal from yesterday's session, which was the Thai stock market's worst since Liberation Day. It hit 5-year lows. It's the worst performing stock market in the world this year. So it's already been facing a lot of pressure. If you flip the board, even ahead of this fresh political turmoil, we've seen that foreign investors dumped about $2 billion plus worth of Thai stocks already. It's seen as one of the economy's most vulnerable to the external challenges. These tariffs could hit the company earnings earnings, worsening the economic outlook. And of course, when it comes to the tourism recovery in the country, it's been disappointing, especially when it comes to Chinese tourists. And this current government was supposed to be implementing key economic reforms. So the political turmoil is potentially this distraction, and it's casting further doubts among foreign investors as to whether any of that can be implemented. Flip the board, take a look at the Thai baht as well. The picture there is a bit more nuanced because of the dollar slump this year. It's hovering, the Thai baht, near these 3-week lows, likely to come under fresh pressure because of the political turmoil, but also because Thailand is a net importer of oil. And keep in mind as well that when it comes to the Thai baht, we're watching out for the Bank of Thailand's decision next week after already easing twice recently. It is expected, consensus is for it to remain unchanged, but we have the likes of Bloomberg Intelligence seeing a chance for an easing because of the worsening economic outlook in the country.
Avril Hong, thank you. Let's get more details now on the political turmoil in Thailand from our Bangkok Bureau reporter Papicha Thanasempipat. Papicha, what's the outlook or the latest on the fate of Paetongtarn's government?
Haslinda, the coalition government is teetering on the brink of a collapse, and we're entering day 3 of an all-out political turmoil. The coalition now holds a very slim majority in the lower house after Paetongtarn's phone conversation with former Cambodian leader Hun Sen was leaked online, and her remarks criticizing the role of the Thai army in a border standoff with Cambodia led to an exit of the biggest ally in the coalition. Now all eyes will turn to the pro-military United Thai Nation Party, which has not yet made clear its stance whether it will leave the coalition or not, although local media started reporting that it will bargain for Paetongtarn to resign in order to trigger a new prime ministerial vote. If so, then she will need to consider this proposal very carefully, as a departure of a second ally would effectively leave her with a minority government, which would then raise pressure on her to resign or dissolve the House to call for a new election.
What's the mood in the country? What are we seeing from protests on the street?
Situations are quickly developing, Haslinda, and we're expecting more protests in the coming days, and nationalist sentiments are running very high on the streets of Bangkok right now. Yesterday, hundreds of protesters took to the streets near the government house in order to call for Paetongtarn to resign, saying that she had reached the trust of Thai people. So far, the protests that we have seen are still very peaceful and not yet out of control or not reached any critical stage that we have that we have seen in the past. So the government can potentially ride this out for a while, as long as it still holds a majority in the legislature, although it will need to start worrying if the protests become too prolonged or take a violent turn, as that could be used as a pretext to justify another military coup.
This is, of course, as you said, a country known for the coup. I'm just wondering what are the chances of that happening?
Right now, the protests are still peaceful, as I said, and we would need to watch out for any escalation or any prolonged political uncertainty. The market's implication would be huge, though, because this domestic crisis comes at a very sensitive time for the government, which has been struggling to boost economic growth and also losing investor confidence over the slow progress in the tariff talks with the U.S. And any prolonged political uncertainty will trigger more Thai stock sell-offs and hurt growth prospects. That is especially bad considering how foreign investors are already facing a lot of risks and have sold more than $2 billion worth of Thai stocks this year. And the SET index is amongst the world's worst performer, having declined more than 22% year to date.
Papicha, great insights. Thank you so much for that. Our Bangkok Bureau reporter, Papicha Thanasempipat. Polka Mishra, partner at Javelin Wealth Management, is still with us. I mean, it's pretty unfortunate, the development in Thailand. It was already vulnerable prior to this incident.
Yes, it's exactly. The growth was already becoming a challenge. It is exposed. The tariffs were high. I think 36% that was announced on Thailand. So trade vulnerability and oil impact, as we discussed, and the currencies not strong because the currency is strong, it's the dollar weakness, but the Thai baht has remained vulnerable. So not great timing. Also because, government had announced stimulus, but now that's been ignored. We don't know the impact of that, and that's not going to come through, and we can end up in an extended period of basically policy paralysis. And as everyone knows, that Thailand has gone through multiple coups, so it's extremely uncertain. Having said that, it's almost comparable to what happened in Korea recently, and we saw the sharp market sell-off. But the sort of silver lining from a market's perspective is that when there's a political turmoil, the sell-off is usually sharper than what the fundamentals dictate. So for investors who are looking at that market, it may create a buying opportunity if they can wait for a slightly longer period of recovery.
What's the risk of a spillover effect? Because investors sitting in the US, for instance, look at emerging markets in Asia as a whole. Might that impact sentiment?
I don't think as much. I don't think a Thailand can create that much of an impact on the overall Asia market. It's the larger markets and the better, more. It's not a very big part of investors' allocation, so to say. But things happening in China, Japan, India, these would have a bigger impact on how they look at the broader Asia bucket. I don't think Thailand will have that significant an impact.
Earlier we talked about the outperformance of the Asian market. What would it take for that to continue?
If things don't change much, I think Asia will continue to outperform. Asia is in a much stronger position now than it has been in the past. Deficits are low, central banks are making the right decisions. These economies are now more independent of the West as well. Some of them are very large domestic markets. So India, Indonesia, for example, and even China for that matter, the stimulus is having an effect, choppy though. So I think that if the world economy continues to be as unstable and uncertain as it is a net positive for Asia.
You see India as one of your top conviction calls. Why? Because when you take a look at valuations, they're looking very stretched right now.
Yes, India has always looked expensive, hasn't it, whenever it's in favor. So yes, look, fundamental story we've discussed many times. It is in the right place, but of late, what's also helped India is the inflation. The monsoon has been very timely, so that's helped bring inflation down, especially food inflation, which is a big concern for the Indian economy every year. So that's allowed central bank to be a lot more aggressive to propel growth. So I think 50 basis point cut was surprising. It was aggressive, and
with more to come.
With more to come, and they have said they will be accommodative. So the timing for India is good. It's less vulnerable to U.S. trade. Its U.S. trade contribution is less than 2% of the GDP, as opposed to, say, in Indonesia, which is 10%. So it is well positioned to benefit. And if India plays policy decision correct in this environment and becomes a bigger part of this reglobalization, I think the long-term story becomes much stronger.
And you're liking China as well?
Yes, we're liking China a lot more now. It's got structural problems, it's got headwinds, but there are also some positives to look at. We saw the subsidies have had the effect. We saw retail sales being more than 6% last month. So yes, it can also drop off like it did in October and November, but it's slowly filtering into the rest of the economy. It still has a lot more structural problems to solve. Property sector is going to continue to dampen consumer confidence, so that still needs work. But on the whole, the tech development in China and the policy making and the increased transparency in policy communication, I think those are positives. And that's one market you don't have to worry about the valuations being on peak.
Polka, thank you so much for that. Polka Mishra, partner at Javelin Wealth Management. Now, the CEO of IMAX China says he expects the company's market share to grow in double digits as they aggressively add screens across the country. The company is betting on big local and U.S. productions to boost sales. And Daniel Menwaring told us exclusively the movie industry is yet to feel any impact from the trade war.
Business is really as usual. It's pretty great to see. You know, the process of importation is really been very smooth. These films are getting dated with regularity, and you know, there's really nothing very much changed that we've seen over the past few months, and we expect that to continue. So again, I hear about this trade war, but we haven't exactly felt it directly hit our business.
Why is that? There was a lot of noise, obviously, with the tariffs and Donald Trump's proclamation about bringing films back to the United States and tariffing foreign films that come into the United States. But is that all a bunch of nothing? I know Richard, your boss, has talked about it's just a bunch of noise, but it hasn't been impacting you?
You know, I got to agree with my boss, right? It started out, you know, with a couple of bloggers that basically started some online rumors, and there was about a week of frenzy around it, and then, you know, 7 days later, it was very clear that business was back to usual. So I think there's always been a lot of noise, and there will always continue to be some noise. But for our little sector, we're pretty protected from a lot of the outside noise.
What did Mgmt 2 basically do to the industry? Because that was really the tentpole for the box office success of late. And there is some concern that after that runs its course, that maybe the demand will taper off.
You know, for me, I think Mgmt 2 proved one simple thing. The audience is there. If you make a good movie, the audience is there. And they showed up in huge numbers. We, year to date, a lot of help from Mgmt 2, have seen 22 million in attendance for IMAX. Right. That's a very large number. And so I think, you know...
It was double year over year, wasn't it?
It was double year over year, that's right. You got your numbers there. So I think it proves that the theater-going audience in China is really strong. It's really about the content supply.
But how resilient is it? I mean, the economy is not doing as well as authorities would like, no doubt. And people are holding on to their discretionary money, their household savings.
Mm-hmm. Well, I think that going to watch a movie is still a really high ROI for people. You know, you're paying less than $10 to be entertained for 2 to 2.5 hours. In the summertime, it's air conditioned. You know, you've got popcorn, you've got Cokes. I mean, in terms of time and money, I think it's still a really high value proposition. So I think that's one of the reasons why we're still seeing a lot of growth in our market share. Again, year to date, we're doing 5% of the total box office in China. That's the highest we've ever done in any year. And I think people, again, it goes back to wanting that premium experience for what is, I believe, a really reasonable cost.
What would be the target then, from 5% to what over the next 5 to 10 years? Of course.
From 5 to 100.
You're taking that to Richard and saying that's our business plan for the next 5 years?
You know, no, we don't give ourselves sort of a target number. Yeah. I mean, we have less than 1% of the total screens in China. We've got about 800 screens in China. So, you know, doing 5 times that in box office is something we're really proud of. But always, I think there's room to grow. And we're going to be pushing the limits into double digits.
Well, I still go to the movies every Friday. Now, before we go, here's a look at our guests for next week. We'll discuss the developments in the Middle East with former U.S. Deputy Secretary of State Kurt Campbell. We'll also take you to the World Economic Forum for DHL's latest business outlook. Keep it here with us. This is Insight.